Good evening, everyone.
Good evening, ma'am.
Yes. It's a pleasure to interact with you all in this virtual session on company law and corporate governance from a global managerial perspective. Today, we just begin our sessions. It's a small information to all. The end of the sessions, we have small assessment. It's nothing, it is a MCQ test. It's related to our discussions. The purely it's covered our today's sessions only. Okay, please everyone, please listen the sessions. Definitely you can possible to attend that test. Okay, please try it. All the best. Okay na?
Okay.
Yes, fine. So, you know that in today it's interconnected in business environment. The managers are no longer confined to operating within one legal system or one country. Whether you are working with startup or multinational corporations, digital platforms or global supply chain, whatever may be, the company law and the corporate governance directly influence the managerial decisions from strategy and finance to ethics and risk management. So, this session is not designed to make you legal experts, but instead it's focused on it's helping you to think like managers who understand the legals and governance implications of business decisions. The company law it's provide the formal structure within which organization operates, while corporate governance it's ensure that its power is exercised responsibility. It's transparently, especially it's involving some ethical matters also. So from the global perspective, different in legal systems, the governance standards and regulatory expectations can significantly impact how the business are managed. As a future MBA graduates and global managers, your ability to appreciate these difference will be critical for leadership, compliance, and sustainable growth. So, since this the virtual learning environment, I encourage you to actively participate, reflect on, ask questions, and connect these concepts to practical business scenarios you are familiar with. So, anyone in you having any in between having any queries or doubts, please unmute and to ask. Okay, don't hesitate. But definitely the end of the section you should be able to view the company law and corporate governance. It's not a constraints, but as it's a strategic enablers for effective management and responsible leadership. So now we can move on to the introduction to company law. You know that the company law refer to a legal framework that governs the formations, functioning, especially it's a dissolution of companies. So it defines the rights and responsibility of stakeholders, directors, and other some of the shareholders. So from a business perspective, the company law is it's crucial for ensuring the legal compliance. It's investor protections, then operational stability, and it's a corporate creditability also. If you see that evolution of corporate law, its corporate law has evolved in response to economic growth, industrializations, and globalization. So initially it's focused on trade and partnership. So it's developed to regulate the legal corporations. It's protect the public interest, especially, and ensure the accountability. It's a modern corporate law. Now it's emphasized the corporate governance, transparency, sustainability, and stakeholders welfare. It's reflecting changes in business environment. It's a common law versus civil law systems. Common law system, it's rely heavily on, it's judicial procedures, and case law, it's allowing flexibility and gradual legal development. But civil law system, or it's based on codified status, it's a comprehensive legal code. So it's offering clarity and predictability. It's understanding these systems. It's help the managers operate in international business settings and comply with different legal expectations across the countries. A role of company law in business governance. The company law play a central role in establishing effective business governance structure. It regulates the it's board compositions, the managerial accountability, the disclosure requirements, and stakeholder rights also. By enforcing it's ethical contact and transparent practices, the company law support the sustainable growth, risk mitigations along, it's a long term value creation also. Next, we can see to the what is the type of business organization is there. Yes, because the first, sole proprietorship. A sole proprietorship is the simplest and oldest form of business organization. Everyone to aware, I mean, should aware, right? It's owned and managed by a single individuals. Especially in India, it is easy to start with minimal legal formalities, and it's commonly used for small business, traders, and some professionals also. So, from a legal perspective, the owner and the business are not separate the legal entities. So, the meaning, the proprietors has unlimited liability, right? The proprietor has unlimited liability in the sole proprietorship. So, while this allows the complete control and quick decision making, so it is also expose the personal assets to business risk. If you, the same concept, we can see the global perspective, because some students also in global, right, in abroad students also is here. That's why I'm saying that global perspective also. If sole proprietorship exists the worldwide and are popular for micro and small enterprises. However, in developed economics, it's they are often discouraged for high risk or growth oriented business. So due to lack of liability protections, it's a limited access to capital. Then move on to the partnership firm. The partnership firm also, it's a very familiar term. It's especially the partnership firm is formed when two or more persons agree to share the profit and liabilities. So it's governed in India by the Indian Partnership Act 1932. The partnership are commonly in professional services such as law, accounting, and consulting. Right? So the partners shares unlimited liability, and each partners it's legally responsible for the act of other partners. So through the partnership offers, it share their expertise and resources, especially dispute and lack of continuity remain the key challenges. If you see that global perspective in the partnership form, na, globally the partnership structures are widely used, but many countries it's impose strict regulations to protect the third parties. So the modern economics increasingly prefer the limited liability variant to reduce the personal risk. So this is also very familiar term only. Then limited liability partnership, we can say that LLP. That is that a limited liability partnership, it's combined the flexibility of the partnership with the limited liability of a company. In India, the LLP are governed by the Limited Liability Partnership Act, the 2008. But normally the Partnership Act is 1932. But in India, it's Limited Liability Partnership Act also is there. That is the implemented year is 2008. So the limited liability partnership or a separate legal entity, and partners liability is limited to their agreed contribution. So they are particularly it's suitable for startups, some professional firms, and it's a knowledge based business, due to lower compliance requirements it's compared to companies. Then if you see that, what about the global perspective of LLP na, it's recognized in many countries. This concept also recognized in many countries, especially including UK, US, especially Singapore. So it's globally LLP or it's favored for professional and service oriented firms, because they balance the risk protections and its operational flexibility. Then if you see that private and public companies, the companies are governed in India by the Companies Act. Uh, but in new Companies Act 2013, normally what is the Companies Act 1956? Yes, everyone knows that. But in recently in India, just to be reframed the Companies Act, recently means the 12 years back, 2013, and or consider the separate legal entities. So the private companies have the restriction on share transfer and a limited number of stakeholders. It's making them suitable for closely held business and startups. If you go for public companies, can raise the capital from the public and or the subject to restrict the regulations. So it's making them ideal for large scale and growth oriented enterprises. If you see the global perspective, it's globally the corporate structures dominate the large business because due to their ability to raise the capital, ensure the continuity and limited liability. The public companies worldwide, it's faced the, it's a strict disclosure and governs norms to protect the investors. For example, in US, a lot of it's public schools, yes, dominating their private school. But in India, it's very open opposite of that concern, right? The private school dominating their public schools. But these are the things, because it's that is the difference between developed countries as well as developing countries, because their government investment is very different. So they are automatically the public hospital, the public schools, everything it's dominating their private sectors. Then company versus LLP versus partnership. If we just to be comparative study, na, if you take that legal status, the companies and LLP have the separate legal existence, whereas the partnership do not. If take the liability, The companies and LLP, it's provide the limited liability protections, while the partnership expose the partners to unlimited liability. Then compliance and regulations. The companies face it's a higher compliance requirements. The LLP have the moderate compliance and the partnership have the minimal formalities. Then it's capital and growth. The companies are best suited for raising the capital and expansion. So the LLPs, it's shoot medium scale and professional business, while the partnership or it's limited in growth potential. Then it's a global acceptance view. The companies enjoy the maximum global recognitions, but LLP are increasingly accepted and partnership are less preferred for international operations. So choosing the right from of it's a business organizations, it depends on the scale of operations. So the regulatory requirements, the global ambitions, maybe it's differ from both Indian and global perspectives. The companies and LLP are increasingly favored due to their structured governance and limited liability advantage. Then it's a company formations. That company formations, first yes, first we can see it's a incorporation process. If you take that India versus global, the incorporation in India, it's is governed by the Companies Act. The recent act I told now, it's 2013. Yes, and it's administered it through the Ministry of Corporate Affairs. We can simply call it as MCA, the Ministry of Corporate Affairs. So the process including obtaining digital signature certificates, the director identification number, DIN number, its name approval, and filling the corporate documents electrically. So the India follow a centralized and digitalized system. It's making the incorporations relatively fast and transparent. So the compliance requirements, it's emphasize the statutory disclosures, it's registered, it's office verification and promoters accountability. If you see that global perspective, globally incorporation procedures, it's vary across the jurisdictions. It's developed economics like UK, US and Singapore, it's offered the simplified online registration with minimal capital requirements. But while it's a common law countries, it's emphasized the disclosure and flexibility. The civil law countries often it's record the strict documentations, and it's some notarial involvement also want to be involved. So it's despite the difference, the global trend is towards it's a easy of doing the business. So the digital incorporation and investor protections, everything is possible to compare the developed or underdeveloped countries. Second one is it's a memorandum of association, we can call it simply MOA. What is MOA? Because the memorandum also of association, it is a document, right? It is a documents. I mean the documents of the company. What in that documents, what are the things should be covered? Yes, it's defined the scope and limitation of the company operations and establish the relationship with the external stakeholders. These are the information is covered now. That documents is named called MOA. Yes, in the time of incorporations, we want to be yes ready, we want to submit their MOA also. Yes, in India, the MOA include six classes. Right, one is name classes, registered classes, it's object classes, liability classes, capital classes, and subscription classes. Total six classes they should covered. So from a managerial perspective, the object class is critical as it determine the range of activity of the company can legally undertake. For example, the name classes means how we can registered our company names. What is the procedures is there? For example, I'm saying here for single example, in India, we want to give a name for any freedom fighters name. Now we can't able to register that name in our companies. Okay, that is one of the restriction. So the name classes we want to be give their proper names. Yes, everything we want to be give. Yes, then another thing is the registration classes means we give their official address, our head office address, our regional office address, whatever applicable na. So we want to give their clear address. Then object classes, what object? We are in that profit oriented company, or we have start their service oriented company. What object we just to be behind to start the business, start the company. Then liability cases, it is limited liability or unlimited liabilities. Yes, all the things want to be give their clear explanation to them. Where through, we are hand over all the things to the government. That's it. Then capital classes, what is our capital? It's a own capital or it's a partnership capital. What is the partnership percentage? Or otherwise, if you go for a share, all the things in future we just to be go for that extensions, all the things want to be giving there some proposal to hear in capital classes. Then subscription classes also, we just to be what are the subscription we just to be given here. All the each and everything in that six classes, all the things want to be covered. All the documents we want to be produced in the time of during their registration, that is company incorporations. Okay, so everything they verified, everything they satisfy na, then only our file move on to the next desk. That is, it's called MOA. MOA is nothing. It is a documents. In that documents, it consists of six details. That's it. Name detail, registered detail, object details, liability details, capital details, and subscription details. That's it. If you see that global perspective of MOA, na, it is that exist with varying terminologies. Little bit changes. Some it's a simplified object classes to allow the greater operational flexibility. Then it's reducing the restriction of business activities while maintaining their legal safeguards. So little bit some changes is there. It's based on their country to country. Then what about that another one documents also needed, that is articles of association. It is also one of the documents, but in that documents it consists of internal rules and regulation of the management or company. Okay, what are the rules? What is your procedures? What is your regulations of that company? Simply says that it's a SOP, standard operating procedure of your companies. It's involved in the AOA. Because they outline the procedures related to the board meeting, stakeholders rights, even appointment of directors, the dividend policies, the decision making process. These are the things just to be involved in the AOA, right? Articles of Association. In India, the Articles of Association must be consist with the Companies Act 2013 and MOA, they act as a contract between company and its member. Okay, simply says MOA, it consists of 6 classes. Okay. Articles of association means it consists of internal rules and regulation of the company. That's it. So fourth, next one is doctrine of ultra-virus. What is the doctrine of ultra-virus? Because it's not ultra-virus, it's not virus, sorry, it's ultra-virus. That is, it state that it's any act performed by a company, it's beyond the power. Okay, it's ultra-virus means it's beyond the power. Yes, it's defined, its MOA. Yes, is invalid or void, we can say that. For example, in that MOA, yes, the memorandum of association, you just to be give one address, okay, in your official address, but the companies just to be started another one, any of another address, or it's going some progress or something now, that automatically it's a void. Okay, that is the meaning. The doctrine of ultra vires means it's beyond the power. What are the things it's you just to be notified in that MOA. Apart from that, you won't give anything. You won't do anything. That is the meaning, right? For example, in liability classes, you just to be giving their liabilities, that limited liabilities of partners or unlimited liabilities, whatever may be, but the things you want to be follow that things. Suppose you just to be make that changes na, that is doctrine of ultra-virus. That means it is a void, it's not a valid. That is the meaning. Okay, so this doctrine, it's protect the stakeholders and creditors by ensuring that the company funds are used only for authorized objectives. So, from the business governance perspective, the doctrine enforces the managerial discipline, accountability, and its legal certainty. Yes. So, the documentation, what information we are given, the same thing we want to be followed. Yes, that is doctrine of ultra vires. Okay, then in global perspective also, while historically it's a significant in common law countries, the many it's a jurisdictions have relaxed the doctrine to provide the companies with greater flexibility. However, its core principle, it's preventing misuse of corporate powers, continue to influence the modern corporate governance framework. Okay, some here having some students having some doubts. Okay, in future maybe we just given the documentation MOA in different address. Again in future we want to change na, that procedure is different. That procedure we want to be formally be followed. Okay, after then only, after getting their prior permissions only, you just going to change their address. So these are the things, everything, it is having their rules is there. So all the things we want to be perfectly want to be followed. That is the meaning. So the company formation established the legal identity, its operational boundaries, and governance structures of the organization. So understanding incorporation procedures, it's a constitutional documents and legal doctrine is essential for managers operating in both Indian and global business environment. I hope that it's clear, right? If any one companies want to be start, minimum the procedure is, yes, MOA we want to be prepare, then ROA, AOA we want to prepare, and we want to be follow strictly we want to follow the doctrine of ultra vires. Yes. Okay, then corporate personality. The concept of, it's a separate legal entity concept. Its corporate personality means that once a company is incorporated, it become a separate legal entity. Okay, so distinct from its member, stakeholders, and directors. This principle allow a company to own property, enter into a contract, it's shoe and be shewed its own name. Okay. From a managerial and governance perspective, this this concept, it's provide a continuity of business, it's limited liability and organizational stability. So the stakeholders are generally not personally liable. Yes, please, Ranjit, please, do you have any doubt?
Yeah, ma'am, there is a previous one, Article of Association A, AOA. There is the company objective and vision also included in that.
Yes, that is, it's not company objectives and vision, it is internal regulations. Okay, for example, internal regulations means what is the power of stakeholders, what is that, how we can, what is the procedure we follow for appointment of auditors, appointment of directors, like that. That much of rules and regulations should be involved. But the company's objectives, it's notified in that MOA, objective classes. Okay.
Okay, ma'am. Thank you.
Yes. Okay, good. Now we can see that it's recognized under Companies Act 2013. This concept, it's formed the foundation of modern corporate law in India. So the separate legal entity principle is, it's universally accepted, and it's a form the backbone of corporate structure worldwide. So second, that corporate veil. The corporate veil refer to the legal distinctions between the company and its members. Its veils or its shield stakeholders and directors from personal liability for the company's act and obligations. So this protections, it's encourage the entrepreneurship, investment and risk taking, as the personal assets are safeguard against the business losses. Then it's a sifting of corporate veil. That is, it's a lifting the corporate veil. It means it's a disregarding the separate legal entity of the company and holding the individual behind its personal liable. So the court may lift the veil in case of fraud or improper contact. Then it's evasions of tax or legal obligations, use of company of unlawful purpose, protection of it's a public interest. These are the things. So the Indian court, it's lift the veil to prevent the misuse the corporate from, and ensure that justice and accountability. So the land, another thing is the landmark cases, Sloman and versus Solomon. It is a company. It started, it's 1897. This landmark English case established the doctrine of separate legal entity. It's a very famous landmark cases, because the Mr. Solomon, it's formed a company and sold his business to it. But when the company become insolvent, the creditors claimed Mr. Solomon was personally liable. So here the judgment is, the House of Lord held that the company was a separate legal entity. So, and the Mr. Solomon was not personally liable beyond his shareholding. So the significance of the cases is, it's established the limited liability, then it's laid the foundation of corporate personally, then that it's influenced the company law across the world, including India. So the concept of corporate personality, it's balanced the business freedom with legal liability. So while the separate legal entity, it's encouraged the growth and investment. It's lifting the corporate will ensure that this privilege is not abused. So together, these principles promote the fairness, accountability, and sound corporate governance. Then, share capital and membership, the equity and preference shares. The equity shares represent the ownership of the companies. Yes, those who are having their owner, that owners, it's keep on some shares, that shares we called it's equity shares. So the equity shareholders enjoy the voting rights, the equity, the rights to participate in management decisions, and yeah, shares in profit through dividends also. However, the dividends are not fixed and it depends on company performance. Okay, but the preference share is different. The preference shares carry the preferential rights over equity shares. It's regarding their payment of individuals and repayment of capital at the time of it's wind up situations. The dividends on preference shares are usually fixed, but the preference stakeholders, it's a shareholders, it's generally to not have the voting rights except in special circumstances. If you go for theoretical, eight preference type is there. Okay, but as I'm not go for in depth. Okay, but all the if possible, you just to be go through that preference share, everything, the types of preference shares, everything. Okay, then it's then shares capital structure. The share capital structures refers to the composition of the company's capital, including authorized capital, issued capital, subscribed capital, paid up capital, unpaid up capital. So lot of types is there. Okay, from the managerial viewpoint, on efficient capital structures ensure the financial stability, the investors confident and regulatory compliance. Then issue of shares. The issue of shares also having lot of methods is there. That is bonus issues, right issues, public issues. Some of the issues also is there. Offered to the general public, offered to the selected investors. So lot of issue methods also involved. Then transfer and transmission of shares. Some shares, it's voluntarily, it's permissible to transfer one person to another persons. Okay, some of the shares we can't able to convert, that transmission is not possible. Okay, for example, so the preference shares convertible, previously I told na eight types of preference share is there. That is, one is convertible shares, second one is non convertible shares. Convertible shares we can possible to transform, I mean convert their shares one category to one category, another category, but non convertible shares we can't able to convert. So these are the things is there. But if you go for in depth na, it's not covered, it's not possible to cover their sections. Okay, so that's why I did not to touch the that much of in depth. Okay, because our concept is not going for see that shares. If you want the one more classes, I'm just especially focused on share content. Okay, then it's a buyback of shares. The buyback of shares, it refers to the company repurchasing its own shares from stakeholders. What is the objectives of buyback shares? Because it's improving their it's earning per shares. We can simply say that EPS, earning per share. Then optimizing their capital structures, then enhance these stakeholders values. So everything in Indian perspective, all the things we can see that now it's a buyback shares, transfer of shares, everything. It's the companies act 2013, right? but in global perspective na, it's a buyback or on, it's a common strategic tool, but closely it's related to the prevent market manipulations. So the share capital and membership form the financial and ownership backbone of a company. So the understanding the share types, it's a capital structures, issuance, transfer mechanisms, and buyback policies is essential for effective financial, managerial, and corporate governance. Okay. Then the company's management, the board of directors is the, affects the decision making body responsible for the overall management, the directions and control of a company. So it's act as a bridge between stakeholders and management. So it's ensuring that the company is run in the best interest of the stakeholders. Okay. Then execution and independent directors, the executive directors are involved the day-to-day operations. Okay, the executive directors involve the day-to-day operations, but they contribute the operational expertise and implement the board decisions. But independent directors are non-executive directors with no material or, is a financial relationship with the company. So their role is bringing objectivity, transparency, and impartial judgment to the board decisions. Okay, that is the difference between executive directors and independent directors. Then what is the role of CEO, CFO, and company secretary? This, it's a chief executive officer. It's responsible for executing the company strategy, right? Then managing operations and achieving the organizational goals. That is the major work of CEO. But CFO, that is chief financial officer workers, it's financial planning, budgeting, accounting, and risk management. Yes, so they ensure only focusing on financial transparency, regulatory compliance about the finance, the investor confidence. Their role is, CFO role is only focused on financial related profile, but CEO focused on strategic level and managerial entire operations. Then what about their company secretary role? The company secretary ensure the legal compliance, governance standards, especially board considerations. So the company secretaryship act as a key link between board, management, regulators, and stakeholders. Are you got it, ma? Okay. Then what is the powers and responsibility of the board? The board key powers and responsibilities, it's including appointment and supervision of senior management, strategic planning and policy approval, ensuring their statutory compliance and ethical contact, risk management. If you say it's a overall activities, right? It's protecting the stakeholders and dividend policies, then risk management, the internal control oversights, it's the entire thing. If in the global, it's a global perspective also, the board is accountable for ensuring transparency, sustainability, and long-term organizational success. The board is nothing. The board is, it is the company responsibility. The board, it's including the directors. Okay, CEO, the monetization of CEO, everything which consists of, we can call board. That's it. So the effective company management depends on the well-structured board. So the competent executives, strong governance mechanisms, understanding the roles, powers, responsibility of corporate leaders is essential for responsible management and sustainable business growth. Then, it's one of the important thing is company meeting. In company law, yes, it's in the, if you take that examination perspective na, without meeting, company meeting, no questions will become. Okay, so the no questions will be formulated. So that much of important part is company, I mean company meeting. We can call it, it's, we can see that some importance meeting. First, board meetings, the what is the board meeting? Normally the board meetings, it's consist of making their policy formations, the performance review, compliance, major business decisions. These are the things it's happen in that board meeting. Yes, normally the board meetings are central or corporate governance. It's emphasizing their risk management, strategy, and it's accountability, right? So the minimum number of board meeting is important. We can say that quorum. Quorum means it's one third of member. Yes, three-fourth members we can call as for example 10 members are there in that for example, in board meeting 10 members, I'm just giving one example, that's it. Okay, so if you take that 10 members want to be participate na, at least minimum three-fourth, that is 3 members minimum want to be present. Suppose no, the minimum that is we can call it as quorum. Suppose the 3 members not presented in that meeting, only 2 members were presented, that meeting is postponed to the next week. Okay, the same day. Okay, suppose the next week same day, it's a government holiday. If because the company meetings they own to held on any public holiday or Sunday. Okay, that is the procedure is there. Okay, the same the quorum is not present, so we can postpone the next week, the same day. The same day it's a public holiday na, so the next working day we want to be conduct that meeting. That is the procedure of the company's law, how we can organize conduct the meeting procedure. Okay, then it's the quorum also, it's one of the concept in the company meeting. Okay, then if you take that annual general meeting, annual general meeting means the name itself is showing annual general meeting, it is the mandatory meeting. Okay, every years definitely the annual meeting want to be conduct. Okay, because here what are the agenda want to be discussed now, it's a financial statement of the entire year, declaration of the dividends, appointment of the directors, then auditors, everything want to be discussed here. Then extraordinary general meeting, the name itself it's having their meaning, extraordinary general meeting. For example, it is convinced for some of the urgent matter. For example, I mean academic general, sorry, annual general meeting. Yes, the AGM will be conducted for next 4 to 5 months, because now it's not possible to conduct that AGM. That's time we having their little bit urgent agenda. For example, one board of directors newly appointed, or we want to be declared, take some important decisions. Okay, so that much of things now, so automatically we don't have other options. Still we won't wait their next AGM, immediately we want to be conduct the extraordinary general meeting. That meeting name is called extraordinary general meeting. Okay, because the special matters that cannot wait until the next AGM, that is the meaning. Okay, for example, some of the changes in the MOA, memorandum of association, some of the changes want to be need in that articles of association. So for example, removal of directors, we terminate some of the directors. So that much of things now we want to wait until the next AGM. So that type of meetings we can call as EGM, that is extraordinary general meeting. Okay, then resolution and voting. the resolution also having their ordinary resolution is there, special resolution is there. The ordinary resolution is passed by simple majority people, it's enough. But in the special resolution we can pass now, definitely we need their higher majority people. Okay, resolution whatever may be the small or very biggest issues or whatever maybe, we take that ordinary resolution na, it's enough for simple majority people. But if you take we pass the special resolution, definitely we need a higher majority people support. Okay, then voting method, it's a voting method. Normally we know that it's a proxy voting, poll may voting, electronic voting. That much of is no, it's a show of hands, that is also voting method only. Okay, normally the companies the voting, if for example resolution, if I'm saying some resolution, who are all that accept that resolution, you can possible to show it that hands, that is also it's a considerable in that company law. Okay, that is also acceptable, that is the meaning. So the company meeting provide a structured mechanisms for decision making, accountability and stakeholders participation. So understanding the types of meeting, resolution and voting process is essential for effective corporate governance and compliance. Then what is the contemporary issues in company law? Startup and company law. Startup operate in dynamic, high risk and innovation driven environment. So it's recurring flexibility legal framework. The company law plays, it's a crucial role in startup formulation, funding and existing strategies. Then it's a cross border business regulations. The cross border business regulations operation across the multiple legal jurisdiction. It's making the compliance complex. For example, foreign investment regulations, that is different, right? Then international taxation, transfer the pricing, so the dispute resolution mechanism, it's a little bit difficult, yes, to across the borders. Then it's these are the complaints. Then it's a digital companies and legal challenges. The digital companies, it's operate with minimum physical presence, it's raising their unique legal challenges also. For example, it's a regulation of digital marketplace. Yes, uh, for example the cryptocurrency fraud or something involving in their blockchains, uh, where we want to be compliant, whom we want to be compliant. So these are the things are involved in the digital compliance and legal challenges areas. Okay, then it's a data protection and AI governance, that is another contemporary issues. That is it's a privacy and personal data protection is a question mark. Then cross border data transfer, it's a security, yes, it is the less securities. Then it's a ethical use of artificial intelligence. So these are the things, it's normally it's a contemporary issues in company law. It's reflect the rapid transformation of business model and technologies. Okay, then if you go for conclusion na, the company law is not merely to set the legal rules, but is a strategic managerial tools. Okay, it is it's not, we can say it is not a rule. Okay, it is a strategic management tool. That is strategic managerial tool means it is the monitoring each and everything, right? So we can it is a self control. Self control means it's not for the director, it's not for individual auditor, it is the self control of the particular association, I mean particular body, that is the particular companies, that is the meaning. It guide the managers in structuring the organization, so the making the informed decisions. The company law enable the managers to align the business objectives with legal requirements and stakeholders expectations. Then importance of compliance and ethics. Why the compliance are important? Why the role in ethics? Because the compliance with company law and ethical standard is essential for corporate credibility and long-term success. So the ethical contact, the accountability help the build the trust among the investors, employees, regulators, especially public. Okay, so then legal awareness for global managers. It's increasingly globalized business environment. The manager must be legally aware the beyond the national boundaries. So the understanding the international corporate laws, the governance standards and the cross border regulations, it's helped the managers operate effectively in multinational context. So the strong foundation in company, the company law empower the managers to become responsible leader, ensuring ethical governance, legal compliance, and sustainable organizational growth, both Indian as well as global business environment. I hope that everyone should be understand. Another thing is the 1 hour we can't able to cover entire corporate law, but anyway, at least this section it's helpful for you little bit. What is company meeting, who are all that board of I mean who are all the members, stakeholders of the companies, normally what is MOA, what is AOA, at least the basic things. This section it's helpful for you for understanding, right?
Yes, ma'am.
Yes.
Yes, ma'am.
Okay. Did you forget the first? I'm just to be saying something for the end of the section. I'm just giving one assessment, right? Are you ready?
Yes.
Yes. Another thing is you don't have other option also. Definitely, yes, at least 75 percentage of students, please unmute and tell that answer. Okay. I hope all 34. I just to be leave it Adira madam. Okay. So one is for me. So remaining 30 students are there. So okay, each students at least the 2 to 3 questions should be answered. Okay. Okay. It's a very simple questions only. Okay. So, okay, the first one is the company law primarily help the managers to the option A, avoid the business decisions. Option B, the maximize the short-term profit only. The option C, structure, regulate and manage the business organization. The option D, eliminate the competitions. Which one is right? Just guess.
C.
Option
C.
C.
Okay.
C.
C. Then another any other option is there? No. Yes, correct. The answer C. Yes, because the A definitely is not there. B also is not there because all the threes are it's a negative form, right? So definitely the only one positive answer is there. So that is right. Yes. Second one is this is only for I'm just for understanding myself how the sections you just to be listen. Apart from that, nothing. Okay, it is a small assessment part. Okay. Second, right or wrong, that is different. That is not matter because everyone want to be participate. That's it. Okay. Second, the separate legal entity concept was established in
B.
four option
B.
is there.
Ma'am,
B.
Option B.
B.
Yes,
Solomon
because
B.
remaining
Option
three
B.
options, we
B.
didn't hear it, right? So, Salomon versus Salomon companies only. Yes, correct.
Yes.
Good. Next, third, articles of associations primarily deals with option
A.
A, B, C, D.
A.
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 Ranjit also
A.
just to
Yeah.
be
A.
voluntarily, yes, ask the
B.
questions, okay? Because that articles of association means it is a internal management regulations,
B.
okay? What about MOA? Hamid,
Objective
what
and
is
The
MOA?
objective of the company.
Consist of 6
Six.
classes,
Yes.
right? Name, registered, object, limitations. Are you understand or not?
Yeah.
Thank you.
Objective.
Yes. Then the fourth question, fourth one is, yes, this is also very easy for that because what is doctrine of ultra wires?
C.
It is approved by the board of directors, beneficial to stakeholders, are beyond the powers stated in the MOA or ratified by stakeholders.
Act of
C.
company is
Kellade.
Beyond.
Sorry? Just try.
B, right?
Beyond the power
Beyond
stage
C.
of the
C.
MOA.
See, beyond
Yes.
the powers. I told na, because
C.
purposively 2 times I'm just to be ensure highlight that point. Okay, in
C.
MOA, yes, some of the things we just to be wrongly just to be process in our life na, in process. For example, we just to be given one example also. I'm just to be given that I just to remember that the register office one address we just to be ensured in MOA, but in officially run the business for any other address na, it is doctrine of ultra wires. Yes, it is the doctrine of ultra wires means it's a beyond the power. Okay, so C1, did you remember that?
Yes.
Yes, ma'am.
MOA.
Yes.
Yeah.
Yes. Next, okay. It's mandatory annual meeting of stakeholders. Which one is mandatory? Board meeting or extraordinary general meeting or annual general meeting or audit meeting?
Annual
AGM.
general meeting.
Yes.
AGM. TC.
Definitely the AGM want to be
AGM.
organized every year. Okay, good. What about board meeting? It's not mandatory, but anyway, policy making, any taking their decisions, definitely we want to be organized the board meeting. Okay, what about extraordinary meeting?
An emergency
Any
case.
emergency?
Emergency case.
The annual meeting has been postponed to another emergency cases, so
Not
we can commit.
postpone, still we
Cannot be
can't
done.
wait still the next AGM. Okay, that much of purpose we need na, we can organize the extraordinary general meeting. Okay, fine. Then next question is, buyback of shares in mainly done to increase the liability. What is the reason? Buyback of shares, reduce the cap control, avoid tax, or improve the capital structures. Why
Improve
again
the
and
cap-
again
Improve
we
the
just
capital
capital
structure.
structure.
Improve the
C.
yes, see, improve the capital structures. For example, I am having 20,000 shares of Tata. Why again I am just to be purchased for 5,000?
So capital will be
Because of
increased.
to increase
Capital
my
improve.
capital structures.
Capital.
Good. Yes. Next one is major legal challenges for digital companies. Office locations is problem, or manual record is problem, or jurisdictions or data protection is problem, or attendance problem. What is the problem in digital companies?
Data protection.
Protection and
Data
jurisdiction.
Data
Data
protection.
protection B.
Right. B.
B.
Good. Yes. Next, eighth, legal awareness for global managers. It helps to replace the strategy or avoid teamwork or manage the cross-border risk or limited expansion.
I think it's
Manage cross-border.
cross-border X.
C. Manage cross-border risk.
Yes, correct. Manage the cross-border risk. Because the problem is country to countries, the regulation should be changed, right? So that is the major problem is cross-border risk. Okay. Thank you. Thank you so much. Are you, it's this assessment, it's helpful for me for understanding how the students or listen the classes. What is that understanding of you? It's helpful for you?
Yes.
Yes,
Course, it's
ma'am.
helpful, ma'am. Thank you.
Thank you.
Thank you. If having any doubt apart from that,
Thank you, ma'am.
Nothing else,
nothing
ma'am.
is there.
Nothing else for the time being.
Okay.
Thank you.
Okay, ma'am.
Yes, ma. Thank you. Bye bye. Have a good day.
Thank you.
You too, ma'am. Have a good day. Bye bye. Thank you so much.